Last week, we talked about how to start investing with just $100. Today, we're tackling something even more important: the 5 common investing mistakes that cost beginners thousands of dollars. I'm Adam, and by the end of this video, you'll know exactly what to avoid on your investing journey. Did you know that 80% of beginner investors make at least one of these mistakes in their first year? The good news: once you know what they are, they're completely avoidable. Let's dive in. Animated chart showing someone trying to catch falling knives versus steady DCA line. Mistake number 1: trying to time the market. This is the belief that you can buy at the absolute bottom and sell at the absolute top. Here's the problem: even professional fund managers with teams of analysts can't do this consistently. The solution: dollar cost averaging. Invest the same amount regularly, regardless of market conditions. This removes emotion and actually gives you better long-term results. Social media screenshots with "buy now" messages versus proper research flowchart. Mistake 2: following stock tips without doing your own research. Whether it's Reddit, YouTube comments, or your cousin's hot tip, this is how people lose money fast. Remember those Kuadan comments on our last video? Perfect example. The solution: always do your own due diligence. Ask, what does this company do? Is it profitable? What's its competitive advantage? If you can't answer these, don't invest. Egg basket animation: all eggs in one basket breaks versus multiple baskets safe. Mistake 3: putting all your money in one stock or sector. I've seen beginners put their entire $5,000 into a single crypto or tech stock. The solution: the 3-fund portfolio: total US stock market, international stocks, and bonds. Or start with a single ETF like VTI that gives you instant diversification across thousands of companies. Animated investor watching charts obsessively versus calendar with "check quarterly" reminder. Mistake 4: letting fear and greed make your decisions. Buying when everyone's excited, selling when you're scared. The solution: create an investment plan and stick to it. Write down your goals, risk tolerance, and strategy. Then only check your portfolio once a month or quarter. Remove emotion from the equation completely. Chart showing last year's winner becoming this year's loser. Mistake 5: chasing what performed well last year. Just because a stock or crypto went up 300% doesn't mean it will repeat. The solution: focus on fundamentals, not hype. Look for companies with strong balance sheets, good management, and sustainable competitive advantages, not just recent price movement. Visual: quick animated list of all 5 mistakes with icons. Quick recap: don't try to time the market, don't follow tips blindly, always diversify, keep emotions in check, and never chase past performance. Master these 5 principles, and you'll be ahead of 90% of beginners. End screen with subscribe, next video thumbnail, and free checklist offer. If this helped you, do 3 things. First, hit subscribe and the bell. We're building something special here. Second, comment below which mistake you've made or almost made. I read every comment. Third, download our free beginner investor checklist. In the description, it'll help you avoid these mistakes. Next week, we're breaking down exactly how to create your first diversified portfolio. Thanks for watching. This is Adam from Wealth Frontier. Remember, the best investment you can make is in your own financial education. See you in the next video.